FinCEN. Ah, yes. Another regulation affecting the real estate industry is on the horizon. FinCEN is the acronym for the Financial Crimes Enforcement Network, a bureau of the U.S. Department of the Treasury responsible for preventing and detecting money laundering and financing of terrorism by collecting, analyzing, and disseminating financial intelligence to law enforcement and regulatory agencies. What? I know, you're probably asking yourself, what does that have to do with me? And how does it affect me as a real estate professional? Well, the answer is simple. It can affect your real estate transactions and can delay a closing. It affects all transfers of residential real estate, including mixed use and vacant land intended for residential construction, where buyers who are corporate entities or trusts, revocable or irrevocable, are involved. Now, here are some key points to be aware of. The effective date is December 1st, 2025. Information to be collected from both the buyer and the seller. No minimum consideration. It can be for no consideration. All cash or financing from lenders who are not financial institutions subject to the Bank Secrecy Act and required to report suspicious AML activity. Background information on corporate entities and their members. Information on which bank and which account the purchase funds come from. And information is to be manually typed into the FinCEN Real Estate Report form online. So, who's responsible for reporting? Hello? Anybody? This is where it gets interesting. FinCEN has created a reporting cascade, and this is a ranked list of who might be responsible for reporting a transaction. Start at the top with the highest ranking individual or company involved in the transaction and move down the list until an individual or company applies. Here's the breakdown. The person or company listed as a closing or settlement agent on the closing or settlement statement, the person or company that prepares the closing or settlement statement, the person or company that submits transfer documents for recording, the person or company that underwrites an owner's title insurance policy, the person or company that disperses the greatest amount of funds, the person or company that provides an evaluation of the status of the title, and the person or company that prepares the deed, or if no deed is involved, any other legal instrument that transfers ownership. In co-ops, the person who prepares the stock certificate. Only one person is responsible, the highest ranking applicable person or company on this list. Now, there are some exceptions to the types of transferee legal entities that fall under the reporting requirement. Those include the following: public companies, securities reporting issuers, governmental authorities, banks and credit unions, money services businesses, broker-dealers and financial market utilities, insurance companies, state licensed insurance producers, Commodity Exchange Act registered entities, public utilities, financial market utilities, registered investment companies, and subsidiaries of exempted entities. FinCEN has the authority to audit and request records to ensure compliance. Reporting persons are expected to maintain records and document reasonable reliance for at least 5 years. So what happens if you don't comply? Well, let's start with the civil penalty. If someone fails to comply, including failure to file, filing false or incomplete information, they could be fined between $1,394 and $108,489 per violation each day. And every day a violation continues, it becomes a separate violation. Are there criminal penalties? Only up to $250,000 in fines and or 5 years in prison for willful noncompliance. To summarize, the new anti-money laundering rule will have the greatest impact on title insurance companies and title agents, including settlement agents, as they will primarily be responsible for reporting applicable transactions. However, real estate professionals will also need to understand the AML rule to help answer client questions and navigate potential reporting requirements. Additionally, legal entities and trusts involved in real estate transfers will also need to understand the AML rule, as they may be subject to new reporting and compliance obligations. I'm sure there'll be plenty more discussion in the coming months leading up to the effective date. Be sure to catch one of our informative webinars for realtors coming up on October 9th at 10 a.m. For escrow officers and assistants, we'll be having one for you on October 7th at 3 p.m. So, I wonder if CAR will add a section in the RPA regarding this ruling. What are your thoughts?